A sweeping bullish coverage initiation of major media players. We'll trade this name and more with Ava Ottos, ER Shares CIO. She joins us for this today. Ava, welcome. Disney is a name that has traded very poorly. Is this now the start of a turnaround? What would you do here?
So last time we spoke about it, we were bearish on it, but it has now reached a 10-year low, so its relative valuation is much more compelling. We also need to remember that last year there was a huge PR shock, which we believe it's now going to change. With a new CEO who is well known in the community, we think there is a good chance for things to turn around. They continue to maintain a leadership position in both media and the park. Many people don't know, but the media attributes 2/3 of the revenue. And we need to remember that their EBIT margin is now 1/3 above its peers, and its revenue growth is double its peers. I think it's a buy at this valuation right now.
All right, let's move on to the stock we have to mention every hour. Tesla, the EV maker, slashing the price on some of its U.S. versions and its Model 3 and Model Y car after reporting a drop in third-quarter deliveries. Cathie Wood's ARK Invest ETF also trimming its stake in the company by more than $25 million today. What say you, Ava?
Well, we need to remember that 25 million, when their position is 725 million, is really insignificant. It probably reflects liquidation of assets, of funds, liquidation of CUs, creation units. And so I'm not concerned with that. We have it as a hold. We actually have it as an underweight, but we do own it. I'm discouraged with its relative valuation, which is high, but I'm encouraged with the fact that it's a very unique mega cap, which is equal to its more than 10 other huge competitors. And so it's a very unique mega cap because the revenue growth is about 40% compared to the 0% to 10% that we see for other well-known mega caps. So it's a very unique story. I think it's a hold.
A hold. What about Exxon, whose shares are slightly lower, as our David Faber confirms the company is nearing a deal to buy Pioneer? You like it? Would you buy the shares here?
No, that's a sell for us. We're not fans of the acquisition of it's a $60 billion acquisition that reflects 15% of Exxon's market cap. And we don't like the acquisitions for two reasons. They are two completely different companies in terms of management structure, in terms of profile and margins. Pioneer is an entrepreneurial company, and when a bureaucratic company like Exxon, based on our research, buys an entrepreneurial company like Pioneer, then there is a cultural clash. And so we are concerned that this is going to happen in this case. We also don't like the value, the price that they're paying. We need to remember Exxon is trading at 1x market cap to revenue. The rest of the sector trades below 1, and they're paying about 3x revenue. So I don't think the market will like the price that they're paying. It's a sell.
Ooh, all right. Ava, for now, thank you very much. We appreciate it. Have a great weekend, Ava Otto.